What's going on? Welcome back to Trending Stocks. Today we're going to talk to you about SoFi. Another very interesting day in the market. I want to break it down on why SoFi is selling off, go over some of the data points and everything else that you need to know. But first, make sure to hit that thumbs up. And with that, let's get right to it. Starting off, SoFi is down 3.04%. It did have a low today of $6.81. And all of this has nothing to do with SoFi specific, so no news, no SEC filings, nothing along those lines. Rather, it is a byproduct of PPI, as well as jobless claims. So the market's interpretation of that clearly causing a little bit more of a downtrend. And so I'm going to play this video near the tail end. And this is the analyst viewpoint on PPI and how that is affecting a lot of stocks. And pretty much as you can kind of see, the market is for the most part selling off. But when it comes down to shorts, they're not really doing all that much. So this is why I like to analyze this information, because by them returning on a red day kind of shows that it's unjustified, which in my opinion, to some regard, yes, it is kind of unjustified, but I'm going to talk on SoFi's technicals and everything. Right now, shorts are returning 225,000 shares, 17.38% of the free float is being shorted, utilization 71.62, and then cost to borrow average is 0.57%. And I just wanted to bring this up. I thought this was obvious, but I kind of went back and forth with someone on Twitter today. So this is a net amount. So this 225,000 shares being returned. This right here on a daily basis, it hasn't updated for today because obviously the day is still going through, but on a typical day, roughly around 40 something percent or in excess of 40% of the volume is shorts, getting in, out, all the other fun jazz. So when I say that shorts are returning 225,000 shares, that does not mean that that's all they've done today. I kind of thought that was obvious, but I just clearly not. So I just wanted to point that out and just so you guys are aware. When it comes to options, 2.72 million in calls, 926 in puts. Sentiment wise, 44% of all the options being done today are bearish. And of the call options that are being purchased, you do see a consensus for it to be around $7. But like I said, rinse and repeat, that's kind of the negative cycle of SoFi. Looking at the open interest for this upcoming expiry date, June the 14th, 38,000 at the 7 and 36,000 at that 750. So once again, another week where SoFi might potentially struggle with that $7 range. I think I was very optimistic yesterday. The fact that it was like, I think I had a high of 740 or whatever else. But clearly, big money was not really getting into SoFi for the long term, because these are all the transactions that have occurred today on the secondary market. A lot of transactions, but I think that has to do with the volatility associated to SoFi, not necessarily long investors getting in, because based on the bid, the ask, and the selling price, everything that does show as a ask is a buy. So you kind of see it evenly divided. So institutions don't really know how to interpret this PPI that came out today. And so, like I said, it's kind of mixed. You do see one good one first thing, so 1.14 million. But aside from that, like no clear trend. And plus, like I already kind of alluded to, I think a lot of this has and is stemming from the technicals. So I'm going to go over that in a second. But right now with it at $6.85, it is simply trading between this S1 and the pivot. So $6.93 was a strong support. Didn't really last all that long. I'm looking at the 4 hour as well. So it's not as strong as the 1 day. So looking at the 1 day, this is why it did bounce off of this general area, this R1 yesterday. So even if you look at this chart, like it bounced off of this is very strong resistance, as well as right here. So initially $7 and kind of 7 cents ish around here. Another strong support, didn't really last all that long. So the next real thing to watch for as of right now is probably going to be that $6.69 range. And that has been the diamond support that SoFi's really survived based off of. Because I do believe over the last 2 weeks, this S1 has been tested, I think like 3, maybe 4 times. Every single time it's been holding up like a champ. I did actually a video just saying diamond support. And yeah, so in reality, I think that might be the next big kind of point for SoFi to go towards, because I did say in my video yesterday, the first sign of fear, you're going to see a significant sell-off. And I said this yesterday because looking at stochastic, you do see it relatively high, so somewhat and arguably overbought. And so this happens time and time again. The first sign of weakness, you kind of have a overdone sell-off. So today is just kind of following the trend, but today it did transition from the higher to the lower percentile of the Bollinger Band, as well as stochastic. You do see a very bearish deviation, so red line above the white. And then number of retail investors are slowly getting out, not doing all that much. I was this close to buying SoFi, because I didn't fully get back into my position. So again, just in case you guys did miss it, I sold roughly around 60%. I did buy about 1,500 shares at $6.90. That was a couple days back. And so I think right now my next buying opportunity would be around that S1, so around that 670 range. But that's kind of, I'm not going to go all in at that stage, because if it does fail to hold, then this is where kind of things could get very, very scary. And like I mentioned in my video yesterday, the Elliott Wave Technicals does have a pivot point of $7 and I think it was like 20 cents. So for as long as SoFi is above that, then yes, it is anticipated to get to around that mid to low $8 range. So right now it is kind of showing a more of a further breakdown. So all in all, interesting day. This is the circus that we call as a investor in SoFi, because it is extremely volatile. Sometimes it doesn't make sense, but I think one thing that is very frustrating, I feel the frustration, is just based off of the massive amount of manipulation. That the fact that almost like 50%, some days like 65% of the daily volume is shorts. So shorts, in my opinion, are kind of keeping SoFi like a puppet. They are literally dictating exactly where SoFi is going to go, and they just want it to be kept in like this little fun box that kind of stays within this S1 to that $7 range time and time again, rinse and repeat. So it's a very unfortunate scenario. This is where, in my opinion, if Anthony comes out and says something along the lines of what Palantir CEO said to shorts, that they're just snorting coke and that they need to F off, I feel like that might help the scenario. But I don't know. Anthony seems very proper by the book, so I don't know if he'd actually do that. But in my opinion, I feel like that might be one thing that could really help the stock. So without further ado, I'm just going to play a couple minutes from this video, because it does kind of explain exactly what is happening to SoFi and just many stocks in the broader market.
For more on where the record rally might go from here, let's bring in Oakmark Funds portfolio manager Bill Nygren. Bill, great to have you as always. We spent the last few days talking more about this secular growth concentration, and I wonder what you think that says about value, if it's a disappointment to Oakmark or an opportunity.
Well, when I hear you talking about all the big winners today, the one thing I know is we don't own any of them. So it's been a rough year for us trying to keep up with a market that's been so narrowly led by very high PE multiple stocks. I think the most interesting thing in the market today is that there are about 90 names in the S&P 500 that either lose money or sell at more than twice the market multiple. And there are about 80 that sell at less than half the market multiple. And at Oakmark, where we're trying to look out 5 years at the companies we think can have the largest increases over that time period, the balance swings very heavily today to the opportunities being in the low PE stocks.
And keep in mind, with what Chris mentioned, so they did reiterate, I think, as a high of around 80 cents for earnings per share. And so that's by, I think it was 2026, if I remember correctly. So given the circumstances of what is anticipated in 2024, so that's around 8 cents, that's like a 10x just in 2 years. So obviously the market doesn't logically make sense. So this is what he's kind of saying as well.
Name a couple of them, and are any of them names that we don't often talk about with you, like a Capital One or an Alphabet?
Well, I think one of the tools that the management teams have at these low PE companies for self-help is share repurchase. So the companies that we're most excited about tend to be in relatively mundane industries where the managements have decided to return the capital they generate to the shareholders, either through dividends or repurchase. So one of our largest holdings is GM. And our opinion of 𝗪𝗓𝗧𝗛 went through the roof this year when in the first quarter they announced that they were going to be repurchasing 20% of their shares in the open market. And they announced earlier this week they've almost completed that already, and they're going to do another 11% of the company. It just seems like investors won't pay much for growth in EPS that comes from share repurchase. But GM's earnings will be going up about 40%. Earnings per share will be going up about 40% if they maintain flat net income, just because of the decrease in the denominator.
So yeah, there you have it. Obviously you brought up GM, not SoFi, but you guys get the concept of how the market is really interpreting and kind of valuing like the wrong things. So I don't know, that's my own interpretation. You guys do whatever floats your boat. Don't forget to hit that thumbs up and subscribe. Give yourself a shout out if you did buy today. If you sold, what did you do? Don't forget to hit that thumbs up, and with that, appreciate all of you watching.